Well, good evening, everybody. It's 11:10 p.m. here in Plano, Texas, where I'm here at the moment. I wanted to go through part 3 of using VPOC in trading. We're going to be using 3 tools tonight. I'm going to show you how those three tools work. The first one is a 5-minute volume profile, but this is a kind of a special 5-minute volume profile, because all I'm interested in seeing on this 5-minute volume profile is value area high, value area low, and VPOC. Okay. Now, the value area high and value area low are set up a little bit differently. Value area high and value area low are set up about between 95 and 98% instead of 70%, because I don't really care about average volume. Okay. I don't really care about it, and that's unlike a lot of traders. A lot of traders say, if you get out 70% volume above or below, then if you get above value area high by about 70%, then you start looking for shorts. Value area low, if you get below that, you start looking for longs. Well, the problem is that you're not going to catch stuff like this, okay, at the top. And I'll explain that here in a second. You're looking for value area high, value area low, and VPOC. Okay, and that VPOC is, or value area high, value area low, setup, as I explained, 95, 98%. So you can catch a lot of these moves here. You want VWAP. Here's VWAP, and this VWAP is coded in such a way that if it's slanting up, it's green. If it slants down, it's red. And that's so you can get a kind of an idea of, whether you're in trend or not. I mean, you're obviously in trend if you move over here. Here's the open. Obviously we're in trend. We pull back a little bit, and obviously we shot up. And this is a 75 volume delta volume chart, by the way. So what happens? We basically take off to the upside. VWAP is pointing up, pointing up, pointing up. And it starts, you start this flattening down thing. This is very typical. You start flattening down, flattening in over here, okay? And then what happens? You come back up here, the last gasp of the buyers. Boom, here we go down, okay? We hit down here, tap back up to VWAP, reject VWAP, and down we go. And you can see that. So, one of the rules is, you don't take longs above a descending VWAP. You just take shorts. And you don't take shorts, you just go long on an ascending VWAP. So, the next thing is order flow. And the only thing I've got via order flow, we're keeping coming back down here. The only thing I've got via, by the way, did you see that come up there and reject? So anyway, we'll come back to this in a minute. The only thing I'm looking for on order flow is I'm looking for VPOCs on individual candles. I'm looking for buying exhaustions. That's a little sand colored thing right there, or you can change the colors. And I'm looking for selling exhaustions, which is basically down here. Now sometimes you'll get something like this where you'll get selling exhaustions right around the same place, and then it'll like, say for example, you've got VPOC here, you got a selling exhaustion here, pin back down to that previous VPOC, and you got a selling exhaustion here, pull back, and then took up to the upside. Sometimes you'll get that, and you'll have them on the same level. Okay. Sometimes you'll have them on a different level. For example, like this. Well, that's not a selling exhaustion behind there, but you can see the selling exhaustion right there, and right there. That is, if you're interested, that thing is VWAP. And I'm probably going to take it off my chart because it's a little bit confusing to people. you can't tell the difference readily between that guy and that guy. So anyway, so you got order flow, you got buying exhaustion, you got selling exhaustion, and you got the VPOC on the bars, which is, you can see this yellow line, the solid yellow line. That's VPOC for the individual bars. Okay. So that's all I'm looking at. Okay. 75 volume chart. So what are you looking for a setup? For a setup, and I'll show you long and I'll show you short here, and this is a pretty good example here. Here's a long setup. Anywhere back in here where it taps, there's a great long setup right there where you've got, unfortunately, it came up and then came back down in your face, but it was a good setup. It just didn't go very far. It went right here, and then it formed a VPOC right there, and then came back down. So what you're looking for stuff like this. You're looking for pullbacks to value area low, to bounce off value area low for a long. There's a nice long setup there. There was a great long setup right in this area. Okay, and the reason why, and I might not have taken these, because look what happened. It came right back down in my face. So, and it came right back down to this guy, which is here's a previous VPOC at 70.28. Okay, it probably came down and touched that guy. If I moved this out of the way, I could probably see, but it probably came down and touched that previous VPOC, reject 70.28 to the upside. So pay attention to these previous VPOCs for pullbacks, for pullback entries. You could have taken that one right there, and in fact you can see where it pulled back. There's that previous VPOC right there at 70.28. Pull back that time, pull back that time, touched it. So you could have taken one or two ticks above it, waited for it to come back down, fill you, and then goes back up. That would have been a nice trade. And you can look for those. Play with these and see how you like it. See how you like those levels. Okay, so I've got a great setup. I would have grabbed this one. See, for example, see how this comes down. It forms formed a VPOC here. Okay, came down. You had selling exhaustion right back here, and that would have been a good short right back into that VWAP. So you take the short, or you're looking for a long, okay? Because we're just talking about longs right now. So you've got a long position right there. You wait until it comes back up here. You got a selling exhaustion right here, okay? You're right above the VWAP. You could have taken that one. Taken that one, maybe. Yeah, you could have taken it, but you're still above that. You're still a little bit above that VWAP. I'm not saying it's not a valid setup, but you'd have to sit through that VPOC or sit through that trade coming down, because look at your value area low. You're still pointing down. Value area high still pointing down. Value area low still pointing down. Now, as it makes the turn up, okay, we've rejected off of this guy, off that VPOC at 70.55. Value area low is pointing up. Here you go, right there. There's a great trade right there. Pulls back has a selling exhaustion right above VWAP. Grab that sucker. Grab that trade to the upside and look what happens. Look at it. You got your value area high has turned up. Your value area low has turned up, and that's a great winning trade right there. So where would you get out? You could get out at, okay, let's see, if your entry was, for example, right in here, say 70.60. Okay, you grabbed it at 70.60, which is there's a little VPOC that got taken out. Okay, say for example you take it at 70.60, or here's a previous VPOC at 70.57, just sitting there. Okay, so say for example anywhere in here, 70.57, 70.60, you take it. Where are you getting out? Well, you could get out there if you wanted to. That's 70.81. There's $200 in your pocket. You could take it there. I mean, if you get a little nervous, but there's no reason to get out of this long trade. There's absolutely no reason to get out. There's nothing on this chart that says get out of that trade. Everything's pointing up. Now we start flattening out right here. Okay, your value area low starts flattening out. Your value area high still going up. So you're thinking to yourself, well, you know, it's starting to get to the end of the trend, but the end of the trend, it's not there yet. Okay, it's not there yet. You're still in an uptrend, but this is a little bit of a, you can see that, and then you can see that little squeeze thing right there, value area high, value area low, right down there. Now, I think that was probably an indecision candle right in there. There's a guy, and he's got a thing called the Jobo squeeze, and I've been jokingly calling this the Ed squeeze because it kind of looks like his. But anyway, I digress. So you could have gotten out right there. There's 70.98. Okay, so you're looking at from, say, for example, what we talking about, 70.60. Okay, so 70.60, 70.70, 70.80, 70.90. There's a $400 trade right there, and you're still not getting any sort of an indication to get out of that trade. Not yet. Okay, come up here. Here's the next level up. Next level up, you're still in that trend. Okay, so if you were taking, you could take contracts off at any one of these VPOCs, say, especially the previous VPOC. Previous VPOC was right there at 70.83. You could have taken one off there. You could have taken one off at 70.98, and you could have taken your final one off at 71.10 if you wanted to. As you can see, it did not come up to 71.26. Okay, it came back up and formed a new VPOC here. As I said in the previous videos, you want to use these as targets going up, but once this has come down and you formed another one, get out of that long trade. Once it's formed one to the right of that chart, not to the left, but once it's formed to the right of price action, yeah, you might want to consider getting out. Okay. The second thing that you're looking for to get out of the trade, see how that flattened? See how that value area high just flattened out right there? Great time to get out of the trade. And this was one of the setups. So let's talk about the setup number one. From the long trade, you're looking at a VPOC, looking at selling exhaustion and a VPOC at or above selling exhaustion or value area low. So you got one at, you got a VPOC at value area low. You got a selling exhaustion here. Here's a great area for a long trade. Okay, the opposite. So you're taking the long trade. The opposite for the short trade. The short trade, you're looking at a buying exhaustion. Okay, you're looking for. Let's move this chart over a little bit so you can see this. There's a buying exhaustion right there. That's setup number one. There's a buying exhaustion right there. You're looking for it. Buying exhaustion in VPOC forms at or below the buying exhaustion or value area high. That's a valid short right there. Okay, we hadn't talked about shorts or not. But that's a valid short. And you can use previous VPOCs. You don't need to necessarily have a VPOC forming right here. You can also use a previous VPOC right there. Say that's a valid VPOC, but we've got an even stronger one that's formed right there. Okay, so you could take that short. Where would you take the short? When the second you see that VPOC, you can either take it there if you got a previous VPOC, or you can take it there when that one forms. Okay, at 70.81, come right back down into VWAP. And you can see the price action was respecting VWAP on the shorts. So you could get out, as it touched 70.58 from, what's that, 70.81 to 70.58. So that's, a couple of $100 right there. A lolly in the pocket. A couple of $100 right there. And then you're seeing it came right back down to there, rejected off that guy, came back up. You got a selling exhaustion. You got a VPOC right there that formed. Take the trade. You got a VPOC right there. Take the trade. Anywhere in here, take the trade. What happened? Bam! Off to the long side. So, so you got, again, selling exhaustion, VPOC at or above the selling exhaustion or value area low. Okay, so you got a VPOC at above selling exhaustion or above value area low. Selling exhaustion or value area high right here. So you're looking at those conditions. Now watch, you can watch this guy as it shows you what's the trend. Number one, you've got VWAP going up. Number two, you've got this forming like a yellow brick road, you could call it, and basically delineating price action. Okay, so comes back up here. This thing flattens out, comes up for a retest. Okay, that's your setup. That would be a setup number two. Price rejected, value area high or value area low, especially if it flattens out. Okay, you've got a price. You've got a right here. You got a reject. Okay, you might not want to take that one because you don't know if it's going to come back up. You don't know, right? Could go like that. Then again, could go, just could be have a continuation. You don't know. So watch this. Okay, you've got 1, 2, 3, 4. You got 4 bars flattened out right here. On that second bar, you see that VPOC right there? That VPOC formed on that second bar right there at 71.18. So what do? You can take the trade right there. VPOC forming below value area high, grab that trade. Okay? See where it popped back up? Didn't come very far and then took off to the downside. Right back into where's our old friend VWAP. Okay? So there's your out right there. You could have taken this trade right here. I don't see where there was there's a VPOC there, but I don't see any, I don't see anything for setup number one. But you can see a setup number two where you have a VPOC above, where you don't have any buying or selling exhaustion. That was setup number one. Setup number two would be no buying or selling exhaustion, but you got price rejection and VPOC forming above value area low right there. What happens? Boom, goes to the upside, comes back up here. All right, you don't have anything here until you look over at your left. What do you have over at your left? Okay, you got this guy sitting there. Am I at a previous VPOC? Because the market will respect those. I've got one at 71.10. Okay, I got one there, and I've got this guy. Obvious reject off of value area high. Come right back down. Where does it go? Right over here. Forms this guy. You've got a long setup right here. Comes back up to this guy. There's a previous previous VPOC. That was one of the VPOCs, the other VPOC I have on this chart. I've got a 5-minute chart and a 5-minute VPOC, and then I've got another standard, just 1 day value area high, value area low VPOC type of thing. Those VPOCs are valid also. So, but you don't have to take that. You come back up here. The second that thing drops and you drop down below there, get the heck out of that long trade. You made your money. You made your money from here. So you've got 70.84. You've got that guy. Some of these things you got to be quick. You come back right up here, and you could have taken your money off there. You could have at that guy. You could have taken your money off at look at that previous VPOC right there. Previous VPOC right there. So, and kind of interestingly enough, see that VPOC right there at 71.10? See where it formed again right there at 71.10? Another short. Great short right there. Anyway, you had this short right there. You could have taken it off right there at VWAP. That's the safe trade. Or you could have taken it off right there where you have your other VPOC and just wait. Or you could have taken off right there and reversed back down here where that VPOC flattened out. Here's the retest on the next bar. you could have waited until you could either taken the retest there, or you could have waited until you came up here, which was the VPOC 7064 or 7056, 57. So you're looking at $70 there in the grand scheme of things. Who cares? Okay, so you have this flattening out, you got this thing going up, you got your value area high going up, you got your value area low flattening out, exactly the opposite of what it did here. And it came down there, it flattened out, came back up. Okay, didn't even come back down here for a retest. So you're not looking for a retest. You'd be looking at, for example, you'd be looking at 70, 63, 64, somewhere around there to push through that. There's another one right there, another VPOC at 70, to push through that, and it pushed through VWAP. And you'll notice as it rotates around VWAP here, the first one or two times that it hits VWAP, it usually doesn't bounce. It's a great type to get out, but when this thing's flattened out like that, price action tends to rotate around VPOC for a cut, for 2 or 3 rotations. So you're back in long here, or you don't have to be. If you're uncomfortable taking that, if you like that long, okay, you like the long, great, take the long. It qualifies as a setup. Come back up here. You didn't like that. You didn't like the exits. You didn't see this. Okay, you didn't see that where you could have gotten out, and you missed it. Okay, there's another one. Oops. Okay, I missed it. So you take off. You could have taken off right there. You got a little money. 70.96 to from 70.80. I mean, that's almost $200. That's $160. I mean, that's nothing to sneeze at. I'd take $100 trades all day long like this, and I'd make lots and lots and lots and lots and lots and lots of money. So let's see, we're right down here. Okay, so we come up. We're getting a buying exhaustion right up here. There's a setup number 1 for the short. You've got a buying exhaustion. We've got a VPOC form at or below the buying exhaustion right there. There's where you take the trade. You take the short trade, 71.10. Get out of your long. Get back into the short. What do? Come right back down. Look at that puppy. Man, that's a beautiful short right there. Comes down, comes all the way down here. You're starting to get selling exhaustions here. You got one right there, one right there. Okay, but as you pop back up, okay, you can take. There is a strat. There's a strat long in here. I take the strat at the body. I don't take it at the wick. I don't wait for the wick, because you've got a really, like, say for example, you got a really long wick right here. Say for example, this had a really long wick and a very small body. You're losing all that value. Okay. So you got value area high down here, value area low down here. Turns around right there. There's your selling exhaustion. You could take that. You could take that trade right there. It's a little risky, but you could take the long. Where do you get out? You could get out at that previous VPOC right there. So you take it around 70.50. So there's 70.66, another $160 trade. Or you could wait until it hits VWAP at, what was that, 70.79. So you're looking at 70.50 to 70.79. It's an almost $300 trade. Rejects off VWAP. You can clearly see that reject. Okay, get back into the short trade if you wanted to at VWAP, and come back down. Here it goes, and it just sells off like gangbusters. Boom, 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 boom. Where do you get out? Well, where do you want to get out? The first bar that I'd start looking at, my first target would be down here. That would be at 69.97. So I'd take that trade right there, 70.79 to 69.97. I would take that. That's a beautiful trade right there. You're looking at almost what, $800 trade right there, $700-800 trade right there, boom. And you didn't have anything that told you up here really this is going to turn around. You had no targets. I mean, you got one here. You could take a contract off there if you wanted to. But see these bars forming on, remember, see the bars forming on the right. You get a VPOC forming on the right. That is usually a, not always, but it's usually a indication of a short. Combine that with value area high and value area low pointing straight down. Look at those puppies. We're going down. Okay, right here. You had one up here, and you could have gotten out there, but this was a pullback. But see, this thing was pointing straight up. Why would you take that trade for a short continuation? Everything value area high is pointing up, value area low is pointing up. I wouldn't get out there at all. You could have, I mean, and that would have made money. Trading green is never a sin. If you grab these great trades up here, fine, that's great. But if you get out right there, you followed the rules, okay? You're looking at maybe the first or the second one or significant level. You're looking at maybe value area high, value area low. You're looking at a VPOC. There's a previous VPOC right there. You could have gotten out right there, taken the short down here, because we're short biased because the VWAP's pointing down. We changed bias from long over here, flattened out over here, rotations. You can see the rotations from here to from the end of that guy to really the end of this guy. It just rotated around VPOC, and those were pretty predictable levels. And then shoot straight down, nothing really to come here. So your first target would be right there, that VPOC right there. So that would be 69.97. If you didn't catch this, the reject off of VWAP, okay, you could catch it right there, or you could catch it where that bar is forming right there at 70.64. Write it on down. Where is your? You'd have to sit through this, or you could just wait until it pulled back to that previous VPOC, reject it off that guy, and then headed south, right? Boom. So where's your first target? Right there. Hey, if you walked away and hit 69.97, you made money for the night. You made your nut. you made a nice chunk of change. Okay, walk away, hold your head high, and said, hey, you know what? I made money tonight. I made my $500 or $1,000 or whatever it is that you want for the day. When you do that, I would strongly advise you, when you make your target for the day, walk away. Go to bed. So what if the market goes down another, $10 a barrel for crude? So what? Who cares? You made your money. You can look at that and go, wow, that was cool. So it came all the way down to, where is that? There's where it flattened out. Remember I talked about that flattening out thing right in there? Okay, we're going back up. So that's a great place right there. See that previous VPOC right there, 68.77? Great place to take a long right there. And you can see what it did. Great place to take a long. You could have gotten out there. You could have gotten out there. From 68.77, if you'd gotten out of your short trade, flip that into a long trade, or if you'd gotten out of your short trade down here, okay. The strat would basically what you do. You're seeing the strat right there, and this is combination. This is where the strat works out in your favor also. You could take it off right there at 68.72, right in here. That's a great trade. You would not have had to wait till 77. They give you 50 more bucks in your pocket. Okay, so you turned around. Value area low is flattened out, so we're kind of done for the moment, at least for a few bars. You come up here. There's 69.06. There's 69.31. Sometimes I'll wait. I'll use two targets up. There's target 1, target 2, and then I'm out of the trade. And that would give you plenty of money. You're looking at, now see where this is flattened out? Up here, watch for that retest. Okay? Again, when we saw that the last time, what happened when we saw this flattening out? Well, we do retest, okay? So what happened when we came down here? Okay, what did we do? There we go, retest. We got to a retest, and then it sold off. Here's your retest. You're looking at your retest up here. Now you're starting to see. What are you starting to see up here? Okay, didn't have a selling exhaustion until you got it right there. Okay, which is, you've gotten out your trade either there at the strat entry up there for the long. What would you have done? You could have gotten out here. You could have flipped it. You could have flipped it right there, 69.49. If you had a 10 tick stop, it came back up to 69.56. So it's at 7 ticks beyond it. Or you could wait. You could get out of your short trade right there, or sorry, get out of your long trade right there. Flip to a short. Okay. Here's your confirmation. There's your buy area high. There's your buying exhaustion right there. That's great. There's your and there's your VPOC 69.44. Great. Let's go down. Where's your short trade? Short trade's right down here. You could have taken it off. You could have taken it off there. We don't know how this trade's going to work out yet, but value area highs moved down. Value area lows moved up. We got a little bit of a squeeze here. You could take it out right here. You could take. You could either flipped it for a long, or you could have taken it out there for money and gone to bed. Whatever you made. If you took that trade right there, 69.49 down to 69 was at 69.14, 69.15. That's a nice chunk of change. Or if you want to, just wait until it comes down here, right? Till 68.99. Right in this area. If there's another VPOC that forms down here, selling exhaustion, VPOC above. If you've missed the long trade down here, right, here's your long trade right there, right back up into value area high, bam, right back there. You've got, and like I said, you've got targets here. You got a target there. You got a target there. You got value area high target right there. Come back down. Here we go. So we flipped. You're seeing this VPOC, but you're seeing a VPOC starting to flat out a little bit. But we're so close to that 68.99. I can't imagine, somebody coming back down to do that. But you know what? If it happens, it happens. If it doesn't, you want to be safe. Take it off right there, 69.06. That would be. There's no shame in making money, 69.06. So if it doesn't come down there, you get a little. Well, I don't know. I don't like that funky price action. See what happened right there though? We rejected. We got a buying exhaustion right off that VPOC. So what that tells me is, yeah, this target is still in play. Yeah, there we go. As I was sitting here looking at, look at that, 68.99. That target was in play, and we just flipping hit it. Now, how good is that? How good is that, guys? Anyway, I'm going to shut this thing down because I'm getting tired. I'm thinking about going to bed. I hope you enjoyed this video. It was a joy to make. I love it when people make money. And leave it in the comments. See what you think about that. Oh, by the way, you can see the reject to the upside. We're coming down, right? So leave it in the comments. Tell me what you think. Tell me what you think of the video. I think it's a great money-making video. And I hope it helps. Leave comments. Please leave comments. Tell me if you use this video to make money. Please leave it in the comments. It makes me feel so good and encourages me to make more videos, by the way. It makes me feel so good that people use this to make money. Use this stuff to make money. It's just absolutely amazing to me, and it's very gratifying. I had some guy on Twitter say that he took some trades from one of my videos, just following the videos, and the guy made $1,300 in a day, and it was like, that made me feel so good. That was absolutely incredible. Anyway, hey, if you'd caught that up here, 69.49 to 69. $68.99. What a great trade. I love it. I love when a plan comes together. Alright, guys. Whoa. Well, that jumped down nicely. Anyway, there we go. We're continuing to sell. So it looks like, if you look at it from a long-term perspective, you're looking at, like, you know, way up here, little bitty pullback here, deeper pullback here, which means probably the next pullback down here, maybe 68.21. You're looking probably a flip down here somewhere in this area. So probably going to look at a flip and go back upside. I'd have to put a volume profile on her to see, but you can put a volume profile between here and here, and just to see if price action just kind of peters out. If they can't push it down any further, they run out of sellers. There's two things that'll happen. Oh, that was a nice jump. There's two things that'll happen there. Oh, there you go. There was a confirmation of the sell, or you could have gotten back into that. VPOC formed, selling exhaustion right there. Bam, here we go. So, and there it went. We got another selling exhaustion in there, but that's this is just a money maker. Anyway, guys, leave comments. Let me know what you think. See you next time.